Hello, good morning in Europe, good evening in United States. This is Ahura with another daily outlook video to see what is going on in the market, what happened, how we ended the last week, and what we are expecting to see in the week ahead. Last week ended in the very interesting levels in the stock markets and generally with the economic data. The data that we have also in the week ahead will be very, very important. Just look at the charts and see. This is let me see what chart I'm showing you. Let's go start with the volatility chart on Friday. We can see this is futures, so therefore that's the Friday's chart. As you can see, the market risk is decreasing, and this decreasing of the market risk came after the data that we had on the Friday that shows inflation, the preferred inflation numbers of the Federal Reserve, the PCE and core PCE, both decreased or softened in December, even if they are a little bit higher than in the annual scale. But both PCE and PC and core PC they decrease. At the same time, we can see that the personal income also was much lower in previous comparing with the previous months. Therefore, comparing with the November, the income is decreasing. January, the general expectation also is low. As you can see, inflation is decreasing, or at least it is softening. So inflation is suffering. The PC and core PC data also is suffering and decreasing. At the same time, personal income and personal income and spending also both have been falling. These numbers telling us that with increasing the inflation, with developing with increasing the economy and developing the economy, we can see the inflation in a much lower levels because the supply chain disruptions and many other reasons they are going to decrease, and lower income also will decrease the inflation. That was the numbers that we had on December. At the same time, so when these numbers are coming, that we can say that, you know what, there are much lower or less reason to put more pressure on the Federal Reserve to increase the rates more than 0.25% expected in December in the March. In the March, that was, because in the last past or in past 1 or 2 weeks there are many financial institutes or the banks and institutes and stuff like that. They are pricing already. They are talking already about the 50 basic point increasing rate hike in March. But as we can see in the market already priced in with the 0.25%, and these data telling us that the more than 0.25% data expectations is very risky. Therefore, that was the reason to see that so the market risk is decreased, and at the same time we can see here. Look at the charts of the S&P 500, S&P 500, Nasdaq, and Dow Jones. All of them they closed higher on Friday, and today in the futures market you can see all of them they increased in on average 0.20%, 0.2%, or 20% on average. So this uptrend started in the stock market, and probably, most probably, since in the last weeks also we talked about that. In the last weeks also we talked about 4,300 levels, and the possibility of increasing higher from these levels. As we can see, the market already created higher low, and these higher low trading above 20 period moving average. Actually, here is a 14 period moving average, but no matter 13 or 20 period moving average, above that, with increasing market volume. Look at here, the market volume is increasing while the bears are getting weaker and now started to increase. The market volume also is increasing, and MACD histograms also decreasing under the zero to come to the zero level. Therefore, we can see all the signals in the same thing in H1 chart. Actually, in H1 chart, we have much more reasons to talk about the uptrend. However, in H4 charts, also uptrend has started. So it means that in the short and mid-term, we can talk about the uptrend. In a long term, probably it can change as since we can see here the dots. The first dot are parabolic RSI dot also is pointed under the candles. Therefore, the uptrend is much possible right now. So here the situation and here the reason. At the same time, the not the earnings reports were amazing. So far, we had 168 company in the 500 SP 500 leads that they have been published their earning reports, and more than 77% of them beaten. They have beaten the expectation. They were much better than expectations. 77%. It is amazing. Yeah, we had a lower, in the latest Federal Reserve meeting, and the latest data shows that we have less expectations for the GDP in 2022. But that, for example, if you say that, but this economy is already much higher than a year ago. Therefore, this 5%, even or 4% of 2022 is something like 10% or 20, even more than something like 10%, yeah, maybe even more in 2026 2022, because in 2022 economy fell down sharply, and from these lower levels we increased somehow some numbers and became at almost at the same level of the pre-pandemic. And now from here, from the bigger numbers, we have for almost 5% or 4.5% expectations from that big number, not 5% from the smaller number. Therefore, even expecting the 4% GDP in the 2022, it means a great number. Therefore, we have to be an optimistic. We have to be an optimistic for 2022, and this is what I am. It's about the stock market. There is a very important point of view. You have to look very important chart. You have to look. If you remember, last week we were talking about the about the gas, and I told about the $4.70 for the weekly target. We totally cashed the weekly target, and now it is much higher than the weekly target, and a very important support at $4.40. $4.40 right now is a very, very, very important support. And as long as you're trading about that technically, we are in an option, while the tensions between between the Ukraine and Russian also is increasing. Even thought of the United States, Germany, and some other countries, they told, you know what, we are guaranteeing that if something happened, we're gonna supply the gas. But the market doesn't accept it. The market sees the reality. They don't talk. They don't look at the politicians' mouth. They are looking at the market. They are looking at the reality of the market. And the reality of the market says that if something happened there, the European economy will be blocked, will be shocked, will get a very big shock, will be very slower, much slower, as they need necessarily the Russian gas. Therefore, even if something happened in Ukraine, we could see the signals from the NATO, we could see the signals from United Kingdom, and we could see the signals from United States that they are not going to send the troops. They are not going to touch anything there directly, at least, because just when they brought the exact excuse that, you know what, the Ukraine is not the part of the NATO. So this is what happening here. Hope they came to the peace and they find a way out from these current tensions. But however, as long as we have these tensions, we cannot expect the gas price in a lower levels, and it will be much higher above the $4. It's about the gas and almost about the WTI, but the oil. The oil price is still upturn. Same reasons for gas, same reasons that I mentioned for the gas. At the same time, economy is improving, economic demand is improving, and supply chain still has problem. Week ahead, we will have OPEC meeting, I think, on Wednesday. You can see the weekly outlook video in the YouTube channel. There's just like a previous video is a weekly outlook video. You can see weekly outlook with Ahura. Just Google it with the Outlook, weekly Outlook with Ahura, you're going to find it. I explained about the week ahead and about the most important data to watch. I think Wednesday. I think Wednesday. Yeah, probably Wednesday or Wednesday will be the Open Plus meeting, and it will be very important for the market participant. But we are not expecting to see any changes. In changes in the plan, in the production plan, because already they cannot increase the productions. Even if they want, they cannot increase because of the lower the investment in the industry, lower investment investing in the industry, in the oil industry. The supply is the supply is suffering, and we need more investment in industry to have more supply. It may probably take 1 or 2 months more till we can have more supply in the market. Then about the so we talked about the US dollar. These data means that we will have less hawkish expectation from the Fed. At the same time, the economic the published economic data also they're not that much good as much as good as it is expected. Therefore, we can see US dollar index in a lower level in a little bit to softer a bit. So therefore, the US dollar can go through 96.40 something like that, and some these levels. Some levels around here 96.40, 96.35, 30.40, some levels around there. And therefore, yeah, before also we touched here. You can see here. Let's go lower here. You can see this level 96.30 till 40. This is the expected target for now for the bears in US dollar index. And after this, we can see we have to watch about the next movement. But for now, US dollar going to be a little bit softer. Therefore, the Euro USD is going to increase, and the GBP USD as well. This the Euro USD as it is increasing. Euro USD and GBP USD, both of them, they probably can regain some of their losses, some part of their loss that they had in the last week. In a cryptocurrency market, as you can, let me bring the chart, Bitcoin chart. This where is the BTC chart? There is a BTC chart. As you can see in the chart, the Bitcoin is decreasing and falling. Last week we talked about that. Still, again I'm explaining, again I'm telling. Still, we do not have any reason to say that based on this reason, the market attitude is changed, and we can say we can wait for higher levels. Therefore, still the downtrend is in the plan. The downtrend is the main trend. Lower levels will be expected for the cryptocurrencies. About the news, we don't have that much important news in the market about the cryptocurrencies to say to count on them. Therefore, the uptrend for Bitcoin, Ethereum, and Ripple for all of them, the downtrend is continuing, and for time being, we can see the prices even in lower levels. So here is generally what's happening in the market in the last day of January. I will write it now. I probably will not have a time to make a monthly outlook video, but I will make it. I will write as every month. I will write the monthly outlook, and you can have it probably by weekend, at the Friday or Saturday this week. You can have it. This is the last day of the January, and tomorrow we're gonna start the next day. So see you guys tomorrow, and enjoy your time. Bye bye.